So the first stuff you need to understand, in my opinion, is how do you analyze the market. How you analyze the market is, there's three ways, very simple. There is fundamentals. Yeah. Fundamentals, which is the news. Basically, what is the feeling on the market? What are the news? Of course, in crypto, there will be fundamentals about crypto, and there will be everything about the macro. So you're gonna have the macro and the fundamentals that you need to understand about, good medias about crypto and all of that. So that's the first one, which is again fundamentals. Second stuff is price action, I would call it, or the structure, which is what we are looking here, which is how the price is moving and all of that. Quite simple as well. It looks like a lot of stuff, but you're gonna understand quite fast the way it works. The third one is the liquidity. Where is the liquidity? Is the market, in terms of leverage especially, is it shorted? Is it longed? And where is the heat map of the liquidity standing? You're going to understand later. But basically, you sit on a chair which has three legs, which is fundamental, liquidity, and structure, price action. So it's analyze of the news, analyze of the technical analysis, what people call technical analysis, and the last one we call it sentiment, and the liquidity is sentiment. At the end of the day, you look only at sentiment, and sentiment. Why? Because the technical analysis, the way the price is moving, it's just offer and demand. Offer is superior. There is a conviction that the price is fair. It's sentiment. The price is moving through a sentiment. The fundamentals is the sentiment of the crowd. The news, when you look at the news, there is a overall sentiment, unconscious common sentiment. It is the news, the way the market is feeling. And the liquidity is a sentiment as well, because if the market is shorted or longed, it's different. In Bitcoin, the big difference is you try never to trade the news. So the fundamental, you little bit put it on the side. In a way, it's something you in Bitcoin. I found it more efficient to just keep. It doesn't mean you don't look at it. There is a narrative that you don't want to miss. For example, at the moment is in Bitcoin, the big narrative is regulation through Trump and also ETF, so institutional adoption. There is a big institutional adoption at the moment in Bitcoin that. If something went wrong, it would be very bad for the market. So the overall fundamental sentiment pushing Bitcoin higher is that it is adopted by the institutions, which give you, for example, this trend, let's say, this slope. This is the way the overall weekly market is moving up. Okay, at the moment. We're going to take another chart because this one is pretty much... this one is a little bit better. So you basically have the annual trend, which is like this for Bitcoin. You see now I'm in weekly, but if you look at the annual, because now we are in 2013 here, for example, and you see the trend is up. There is no problem to check it as an uptrend. So this is the first thing you're gonna watch. Is it what is my horizon of investment? When I buy something, am I buying for a few years? Am I buying for a few weeks? Am I buying for a few days? Am I buying for a few hours? This is the most important. If you don't understand in what time frame you invest, you don't invest. Okay. That's the first thing. Because overall, the structure normally gives you this. You understand, I don't know, if, for example, you buy here, you understand on 2 years investment, you will be underwater for quite a long time until here. So for 2 years, you will be underwater, and then here you will get out the slope, but be careful because after 2 years underwater, maybe here you want to get out. You go back to your money and you're like, oh, fuck, I did a mistake. So there is a very big important idea on this idea of resistance and support, which is called the inversion of polarity. Exactly, for example, here I'm looking, here it was a resistance, you agree with me? Here it got broken, okay? became a support, and then became a support here again. So all the people that were underwater here, when we came back here in terms of sentiment, what you can say is they sold again, because they were underwater buying the top. Then we are right here, they sold, it went down again, but the moment we broke it, it became some support. So it's the inversion of polarity, it's called. So very often, what was a resistance before will become a support. This is like we are going now more into the technical, we talk about technical analysis.
The chart on the bottom is the offers, right? Like people buying and selling, the volume of the transactions.
This one?
No, this one.
Yeah.
So if I look at that, so these days the volume of the transactions is much less. So actually people are
because it's in Bitcoin.
Yeah.
And as Bitcoin went up in dollars,
the people are not selling.
No, Bitcoin went up in dollars. It's normal. The volume in Bitcoin is smaller because you don't exchange as many Bitcoins. You have to understand over there, Bitcoin was worth 10,000 as a maximum, and it was worth 1,000 as a minimum. So that's why the volume of Bitcoin was huge in here. And that's why it's always decreasing, because at the end, the price is so much going up that the volume as one Bitcoin is destroyed, let's say. It's normal, or it's exchanged. It's normal there is less and less Bitcoin exchanged, because now a Bitcoin is 110,000.
People are holding to it.
Alors, we cannot really say that. No, it's more like, because the volume, if you put this volume in US dollar, it will go different. It will go like this.
Okay.
As it is Bitcoin, and the Bitcoin price is up, it's quite normal. The volume is going down at the end. Well, anyway, you see the overall trend. You see there is like bull markets, bear markets. No. You analyze a little bit this. You say most of the time, look, if I invest at the old top, maybe I'm going to get in. You see, I mean, on Bitcoin, it's quite obvious. Every old ATH after becomes a support. You know, in many ways you can see that, but it's not very important. Analyze the overall trend is the most important. So we are now in an uptrend yearly. Year by year, it's an uptrend.
And
now I go straight.
If I look at that, I mean, what caused those breaking points in the history? So there was this split and everything that I kind of.
Many people think it's the halvings. You know, halvings. You know, like so if you cut the supply that is mined, it gives you and it makes the value jump, because it's a programmed rarification of the asset.
Okay.
Because every time I mine some Bitcoin, I think at the start it was something like that, in my opinion, until let's say 2017, which was the big bubble. In a way, that's the moment really where the price pushed the most. Many people think it's the halving. Me, if you look at it, you're gonna see it. For example, if we just
because there was this 2 years in it, right? I mean, it's flat. And now
and you see here, even the blue stuff is probably 2 years stuff. Yeah, these are 2 years bounce, like the blue. You see the blue things.
Exactly.
So that's where you see like 2 years down, 2 years up, 2 years down, 2 years up, 1 year down more like, and now 2 years.
So what makes you believe that it will continue?
By the structure of it, in my opinion, I see more the things like it's American elections. You can find 4 year cycle all the time. In a lot of stuff, you know, like and American elections, so they are 4 years. And if you see, very often the first half of the mandate is the president has full support. In America, it's supposed to be like that. It's made to be like that. Then they lose a little bit a piece of the chamber at the mid of the elections. And so there is a lot of liquidity at the start of the elections and less liquidity on the 2 last years. But
so if you take the elections, so 1.5 year more, you believe the price might go up?
Yeah, something like that.
And I think that will be also fueled by that institutional investors, ETFs coming into play. Yeah, because on Bitcoin you have what is inside crypto. You have the macro, which at the moment is the rates are super high. Powell is not moving,
So it should be a risk-off moment, but the market always will have one year, 6 months to 1 year ahead of what's happening. It's a rule, you know, like
Priced.
it's like the buy the rumor, sell the news stuff. You know, you always move before, and finally it becomes a kind of rule. You know, like what I mean. So I think now the market has front run the fact that there will be the rates will go down, which will bring new money in the system, which will benefit to the technological assets, let's say. But it's not happening. Yeah. So it's weird, you know, because so that's why even if you that's the S&P 500, for example, which is more related to what Powell is doing and everything. Or the chart is sorry, but if you look the S&P. The S&P is in a kind of canal. I mean, this is a real right slope at the end. And when there is big crisis, we go down to this red one in the middle. I don't know if you see it, the red one, which is COVID and subprimes. But it's quite fast. You know, the recovery is amazing. So I would say when you are under this red slope, it's all in to S&P, to actions, you know, of course. And when you touch the bottom, it's also a kind of all-in, you know. I mean, every time you touch here the red slope, it's a nice point of buy. Why is that? Because simply, human being wants to beat the inflation. It's regular, it's normal. And if you look, for example, I have one chart here, which is quite interesting, which is S&P divided by the M2. M2, you know, it's the amount of monetary supply in United States.
Okay.
But if you look, it's been forever. I mean, we look at now, 81. There has been, if you look at inflation and the way it works, so because most of the people think that inflation is dependent on the monetary supply, it's not for sure, but voila. If you look, what is happening is that you have this nice range. It's moving like a crab, basically, and that there is a support here. There is no numbers, of course, because it's impossible to categorize. But let's say here is what I write. Here you go back to cash.
In that line.
Once you pass this line, here you're all in stocks, and here you're all out stocks.
Can I understand better? So here you buy.
Yeah, when you buy heavy.
Yeah, when you hit here, you sell.
When you start to hit here, you start to get out, exactly.
So we are at the moment...
We are at the moment...
Above.
We got a back touch here in the middle, and we are at the moment above here. So it's a selling point, in my opinion. Now, the big selling point will be here. Here is like, you have to be, in my opinion, out. What I mean about that, and also you have nice targets. You know about chartism and all of these things?
Not fully.
Not fully?
I mean, all this, the different theories now.
Okay.
More technical analysis, you mean, right?
Yeah, even more technical. For example, chartism is quite simple. It is like, for example, here I have an inverted head and shoulders. You see? Head and shoulders will be like this. Okay, this is a top figure. This is a bottom figure.
Yeah.
D'accord? What you do with technical analysis is you do what we call a swing, which is I take the full depth of the figure, and at the point of break, I put it back. So here it will be a little bit higher than the top. It's not for sure you're going to touch it and everything, but it's a nice way to say where you enter, where you get out. You know, it's an easy way, let's say, to understand where you go. You have a lot of them like this. For example, there is one of the Bibles, which is this kind of books, but they are like heavily with, you know, statistics. No. The Bible, the real Bible of it is the Bukowski.
Yeah, I heard about it.
Yeah, voilà. The Bukowski about chartism is, let's say, Alors, for some people it works, for some people it doesn't. Now, me, what I do to make it quite simple. Now, you see, basically, the idea, gold, for example, if you look about inflation, a house in America, a medium house in America, it was costing 20 ounces of gold in the 80s. It's still costing 20 ounces of gold. So the price doesn't change. Or if you look at, it's more something like you need to see it this way. And here I'm talking about very long investments. For example, here I look at a pair which is Bitcoin versus US dollar. US dollar can depreciate, but you don't feel it. So in terms of gold, this house has ever been the same price with fluctuation, of course, around some stuff. But at the end of the day, you just try to beat inflation, and the market is smart enough, and the human being is smart enough to do it. So all the prices, they adjust compared to the loss of power of purchase that you're gonna have because of the debasement of money, which is made by printing. And I am a government, I took too much debt. If I print, what I bought in the past with lost its value. So I'm going to give back money. You understand what I mean? I'm going to give back money that is worth nothing.
Yeah.
But I had a good investment in the past when the purchase of power, when I contracted my debt, the purchase of power as a government I could have was good. And printing, I am going to give back money that the purchase of power is not good, but it's good for me. So debasing your money, and because what is money at the end is you take your value of working and you move it through time. It is, for example, now you're going to work for me, I'm going to pay you later. And the idea is really to transport the value of working for later. And basically the idea of people is also to transport the value of your work until you get retired. But more than the taxes, in a way, this transport of value in time will get debased by printing.
Yes.
So people fight against that, and it's normal and it's regular. So before they get retired, they want their money now to worth exactly the same at what it was worthing at the end. So the whole idea of all economies, in my opinion, or any investment, is to beat inflation. Yeah. Some people do it better, so they make money on the top. Some people think they make money, but they don't make money at the end. It's and there is a way also, which is against investment, which is you can do the consumption right now, and you will fight inflation. For example, all the money I have, I spend it. And I will beat inflation in a way. It will not be very smart, but in a way, I will beat inflation. So that's the whole idea of it. Now the time frames, because it was the idea of to enter into technical. Voilà. Now for example, it's another stuff. I'm in daily. I can understand more or less. If I'm in daily, I'm more like at the top of something. I don't know if you see it straight, but I'm more like at the top of something. I need to break this to go higher, no? You get it with me? I don't know. It's quite obvious. Voilà. So, and then there is a lot of chartist philosophy. I don't always use chartism, but for example, to give you an idea, this is a double top here. You see it? Double mountain.
Yeah.
Okay. So when you lose the support here, it's the same thing. You're going to do a swing. Okay. You're going to say, okay, I'm going to take this swing. I'm going to bring it there, and I'm going to short here, and I'm going to sell here. What you usually do, if you are smart, is, here it would have been difficult. I remember here it was quite a difficult moment. Is you short the retest. You don't even, here it was straight to the target, so it's a bad example. But normally it goes down, then there is a trap, it retests this ancient support as a resistance, and this is the way you short it. For example, to give you just ideas of chartism stuff. Then after so this was a double top. There is a lot of figures like this, but otherwise I can show you the way the price, for example, did a nice turn up.
There is also a double top there, no? Recently.
Yes, exactly. You got it.
So it will go down, you say.
Now, this is where liquidity enters. Let's say, okay, simple. this here is a nice double top indeed, but this is where the liquidity enters, and this is where the price action also enters into account. Here, I'm going to look at this, and this is quite a support, okay? I am going to give, and that's the importance of the time frame in the way I use it, I'm going to give this a daily time frame. Now we are in daily, you see?
Okay.
And this support seems to be daily. I mean, why is that? For example, me, I work in terms of, when I just look at the price action, in terms of hard closing. What is a hard closing? It is when I did an opening and a closing under the support.
Okay.
Okay? As long as so when you look at the candle, I need to have the body of the candle that is under the support. Here there is a tiny bit, it happened. It was hard close here, if you look, because even if I take it seriously, I mean, I will have to put it here. My support here is normally where I see, okay, we had some spikes down to it. For example, here is a nice one, okay? So it was hard close. This one was hard close. So it's a bad example, but it's a good example at the same time. And then it was recovered, okay? So the whole idea in this liquidity stuff is what we call SFP. SFP is a swing failure pattern. So it's the opposite at what worked. This one worked. You got it? Because it went straight down to the target, okay? This is called swing failure pattern. So this is exactly the way you articulate chartism, which has a nice directional, a way to go up or down. And no, this is exactly a trap. It is going to fail, okay? Way you organize, way you understand it, and here you can understand it was a trap, because you see, imagine you shorted the retest, because there was a moment where there was a retest here, and you could say, well, that's my moment in a little time frame. That's my moment. It is that it was just they took the liquidity, and so now, because otherwise it would be like a 5 hours stuff, we are going to talk again about technical analysis, but we are going to talk about liquidity. There is a last thing in technical analysis I want to tell you about, is the volume profile. So you saw the volume here is per day. This is the volume per price.
Okay.
D'accord? So it means here, if you look, there was a lot of volume around 96,000 euros. You see, I'm on 96 now.
Bought.
Alors, there was selling and buying on this place, but most of the time you don't even need that to see it. You can understand here it was a consolidation, so we spent a lot of time. Here it was consolidation, we spent a lot of time. Here it was a consolidation, we spent a lot of time, and here as well. So this is what we call a node of volume profile. Let's say most of the last traded Bitcoin in time from 2024, so let's say one or 2 years ago, they were exchanged at this price. Some people sell, some people bought. It's not a question. But you can understand also that this node of volume profile lately was a support. Why is that? First, people who shorted this zone, for example, they were underwater here, exactly what I explained to you here. Here they arrived, they came back around break-even, so they lost their position. I mean, they gave it away. They were like, okay, I was too scared and everything. So this is, of course, what I explained to you about the inversion of polarity. And second, it is that buyers are very interested in this zone. And basically, every time it goes under 100,000, they buy. Even though we did this game here, it's not a question. Here they were buyers. When we get back here, they were still buyers. And voila, that's a place where it's...
So you say probably 96 is the, if I may use that, is the support.
At the moment, yes. If there was a massive black swan, I don't tell you the support is going to hold. But at the moment, this is where people are... It's a very big zone where people are over interested in buying. And you could see it, and it was already the case, even in 2024. And if I go back in time...
This is USD, right?
Yeah. If I go back in time somewhere, Alors same. Alors now it's little bit like an ID, huh? But if you look also, I told you about this kind of head and shoulders. You know, here there is a nice momentum. This I call the momentum is the trend line. The way we every time we retest it, little bit like I show you on the S&P. It's like the trend of the movement, the slope of the movement. And what we did, if we look at this head and shoulders, for example, you could get the idea that it was a head and shoulders that was the big correction, that we broke it and we just retested it. I don't know if you see the price, but we arrived exactly on that slope, the one on top. So if you do a slope between this, that, and that, we retested it, and now we go to the target, which is at the moment 330. Let's say you can, of course, this trade will happen in a yearly time, which is like, but it will be the idea, let's say, that we broke something, which was that. There was the correction, and now we retested. So the entry was here, around 76, 78, and now we go to the target at 330, and then we don't know what is going to be the rest of it. But let's say that could be an idea in very long time frame, because you see that the trend is up. I explained to you in yearly. In a very long time frame, you don't insult nobody and you don't insult nothing. You are not insulting, saying that Bitcoin could go to 330. It is not insulting, let's say. Now, also, and just in terms of price action, so I explained to you this idea of support with a time frame. So you accept a spike down, but you understand if we gain it back, it is a liquidity taking. Okay. D'accord? Also, now we are going to talk about leverages and all of that stuff. You also need to understand the idea in technical analysis of impulsive move, and corrective move. I don't know if you get it. Yeah. This, for example, could be called, at the moment it's not broken, we don't know, but it could be called as a bull flag. What we call a bull flag is generally you have the stick of the flag, you have the flag, this is the correction. When we break this correction, we can make this kind of move, which is, in fact, I got an impulsive move. I ended the correction when the distribution took an end. So basically, when we break the top or when we retest the flag, and then after this impulsive move, I repeat the move I did before. I repeat the impulsive again. So impulsion, correction, impulsion, and you have it all the time. It's called the Elliott waves. You always have this kind of stuff. For example, if I take a bigger time frame, let's say. It's quite obvious that I have, at the moment, impulsion, correction. Here, correction is flat. Impulsion, correction, and maybe a new impulsion. Yeah. If I take here this idea, impulsion, this is what we call expanded flat. So normally it could hold here and push up, but it lost its move, and it did. We call it expanded flat. Well, after it's. But you see here, impulsive, corrective. I mean, you can draw them. It's quite easy. This is all an impulsive. This is impulsive, corrective, and this was impulsive, corrective. You can see them. I mean, it's obvious. So you see the overall trend is impulsive to up, impulsive up, and corrective down. Voilà. Anyway, so every time in its time frame, you go under the structure, because you understand then that. Let's take it.
So these things. So this. I mean, I understand the technical analysis. It's also used in the stock exchange, right? So you can use this in anything, including gold, for example.
Absolutely, totally. Just there is one thing that we're gonna get to later, and I should start with it. It's called the risk management, which is, it's not because you draw a line on the here, you draw a fucking line on your stuff that it's gonna hold. You understand? So the risk management is like, I'm not gonna push myself in more than 5%, for example, of all of my accounts, my trading account, into this ID. It is insultive to even think about doing 10% on a only one direction. You understand? Yeah. This is why I never. I never keep crypto being more than 30% of my portfolio, and I never keep it being less than 10%. So this is my window where I feel comfortable. I sleep easy and everything. Never crypto is more than, and when I say my portfolio, it's even all my patrimonial, including the house and everything. But never I let crypto, because otherwise I'm not going to sleep okay, because it's moving too fast and everything. So and I'm taking some risks that I don't want to take, and this gives me also the balance and the bounds of what I can do, what I cannot do. So I don't know. For example, let's say your trading account will be 10K. Here you could have shorted and said, yes, we are on a double top, like you said exactly. This ID. You understand. In a way, you are against the movement. So, and many people say the trend is your friend, but the question is in what time frame? It's what I answer all the time. It's like, yeah, the trend is my friend, but if here I am going to trade instead the 1 hour, the trend is going down. Sorry, no, the trend is down. So there is a big sense saying we are not going to beat that top. We are going to, because this is what I saw before, like this is a downtrend. This is even more downtrend. Here I go up, I fail. And at the same ID, when I show you, for example, this support, here in a 1 hour time frame, I have a big resistance here, and it's a wonderful place to short on the 1 hour. You see? It's not hard closed. You understand? Well, yeah. Maybe it's more like here, you see? But it's not hard closed. The touch, they are beautiful. Not hard close, not hard close, not hard close, not hard close, not hard close. And when you get to the 1 hour, the price, if you have a nice resistance, and here you see it's a beautiful shot, you go from 110 to minus 10%. With a little bit of leverage, you can make tens of thousands just on this move. So the whole idea inside there is also, well, you can short, but this idea of I take the liquidity and I short at the most greedy point is very interesting. If you do it professionally, this entry can go to, let's say, 2% of your portfolio, 3% without problem, because it's professional. You weighted the stuff to really go to the, even you could even say here, more professional. Okay, I'm putting 5% in the short. If we take the liquidity upper than here, we take the liquidity and then get back. Okay, you insult the trend. The trend is, because I showed you this idea, trend is your friend on the 4 hours and everything. So this is a little bit insultive, what I said now. But then you have a more professional entry, so you can have a bigger entry. So the more greedy you are in your entry, the more your position can be big, let's say, in a way. It's a bit complicated. It's a lot of stuff in just. Really, but the risk management is super important.
You need to really, how to say?
You need to be greedy. You need to be patient. If you are not, then it's 0.5, 0.2% of your portfolio you can put at stake. Correct. When I say put at stake, it's between your entry and your stop loss. For example, here, typical entry here will be, let's say, typical entry. On va le faire comme ça. Short. I enter on the 1 hour. I invalidate if we break the structure. So if we break this point, I'm not in the position anymore. And what I'm going to try to get is a more low than this. You agree with me? Because you want to short, you want to go lower than the top. So this is a typical good entry. Alors of course, now it's easy to do the Meteo of yesterday and to say, look, it would have worked. But if I don't show you something that works, you are not going to like the idea. But here you see the resistance in its time frame, and it's interesting that the time frame is very small because it's a 1 hour resistance. Never hard closed, so clean entry. you could say, okay, interesting. Then I buy it. I short here. I invalidate if we break the structure, because then it means this is broken. This is broken. Okay. And voila, you could even here, let's say, have an entry around here that will not work, for example, because here will be a nice resistance to short. Same thing, but you see, you will be taken out. But here, between this and this, it's a 1 hour. It's around the top. You waited quite a long. I would say you can put 1, 2, 3%, depending on your what
I never
what you
do short, and I don't know how to even do short. The other thing for me is I will not do daily. I will not do hourly trade.
Ouais, mais alors.
I'm trying to understand how much should I put on a long term and try to get the signals of should I get out of the position,
Yeah.
and then get back. I mean, all these longer term trends, right?
Okay.
When should I enter? When should I exit? Like, because I understand the theory, but man, this is a full-time job.
Yeah, it is. But also, you get better at it. For me, I started trading daily, and then I was like, well, I miss action, and stuff. So I ended trading the 1 minute. But trading the 1 minute, it means you stay in a trade for like 3-4 hours. But doing this, you do so many trades that, of course. But you're right; it's a full-time job. But just to show you, the idea will work in 1 hour. And for you, I will not say even the daily is your time frame. I will say more like the 4 hours, because 4 hours it's already a trade that could last a few weeks. Really, like voilà. Then to get back to what interests you maybe more. Here I have a downtrend in the middle of an uptrend. So let's say the 4 hours is going down at the moment, yeah. But in the middle, I'm in a daily that is going up. So everything that is going to go under the structure of the 4 hour is interesting as a buy.
Okay.
Because I could be.
But what if it breaks that resistance? Wouldn't it?
If it breaks here?
No, the support. Sorry.
The support?
Yeah.
But then you will have the continuation of a forward downtrend. Okay. If you do the entry here, in my opinion, that's what I will do. I didn't take this entry, but I could have. If you take this entry under 100, so under the structure here, when do you take profit? Here. It's quite simple. Now, what I do all the time, really all the time, and for me it is a game changer. And I really do it all the time. I take my entry here, and my time frame is the 4 hour. You understand? I don't want to insult the 4 hour. The 4 hour is going down. If I insult it, it's not good. And why I would enter in something that is daily, where actually what I want is the move up in a downtrend. Okay? So what I do all the time is then I pay my trade here. So I protect my capital. Even the 1 or 2% I put at stake, they are saved. So for example, let's say I made here, if I do a little bit of leverage, I'm going to be at 200% on my position, d'accord? I doubled my position, basically even at 200%, I tripled it. But me, I like to do it a little bit more complicated, a little bit higher, let's say around 150, and here I'm going to sell half of my position. So I'm going to let go out half of my position. I'm in profit. I paid for the fees, for my broker, for everything. I paid for everything. And then I keep my position. So it's been halved. So it's 100% of my position. It's more 150 because if I do, you get the point. To go for a runner, and then this stuff is going to look for the daily time frame target. So you always protect yourself. There are some people, they do on the trend. Here you understand there is a distribution that is going on. So they do it on the trend line, up. Some people, they do it at the top. It depends, like really. Some people, they pay themselves here. Here they pay themselves and they protect their capital. If you don't do it, you are gambling. You know, of course you can have a nice technical analysis. You're gonna pass like 3, 4, 5 trades. Okay, no problem. But you are just gambling. It's like casino. I mean, there is no. But then it gives you this idea to be like, well, where is my next target? But it's the daily. So this idea of impulsive, corrective, impulsive. I paid myself, for example, if I enter under the structure here around 100,000, I pay myself or on the trend or at the top. It's not a question. Then my runner is going to 145, 148 here. You see? So my runner is going to be my performance. Voilà. And I'm never insulting the time frame where I am in. Here, the 4 hours is going down. There is no reason. It's going to break now. And if I enter here, it's interesting, okay? So my advice would be you want to wait for a correction. You don't want to enter into this kind of stuff. You want to wait for the price to go under the structure in the 4 hour, in your horizon of time.
Can you tell me again? Because this chart is showing the 4 hour.
4 hour candles.
Okay.
You see here,
and
every candle is 4 hours.
And you said that the runner is daily?
The runner is a daily because the daily trend is up.
Okay. Can you show me this chart? So these 4 hour candles. So
this is the 4 hour now.
12 to 4 to whatever.
Yeah. Now we look the 4 hour.
Yeah.
And the trend is down. You
Yeah.
see? Now I'm going to push it to daily. After what I call the daily is maybe for me, but for me the daily is going up. The daily is more, I see it more this way. You know? Tac, 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 tac. Okay? The moment the daily will reverse is going to be at 92. You understand? There is this idea of the Dow low, which is I am making lows that are higher every time, and I'm making highs that are higher. This is an uptrend. So when I look here at the daily, the way I look at it, the daily is going up. The 4 hour, you can see it on the daily, but it's going down. You know. And you, for your horizon, I think your horizon is probably few weeks, probably this kind of stuff. Your horizon is more like you need to navigate between weekly. Weekly is going to give you the big trend. Of course, the weekly here is the one going most up. I mean, this is obvious. The weekly is going up on Bitcoin. The weekly is always almost going up. I could see a trend here going down. Okay. But it's a correction, you know, it's minimal. Well, anyway, there is an importance of the time frame, and what time frame do I trade? Do I trade this correction or this one? And in my opinion, the point of entry and the point of going out has to be managed depending on if I take an entry that is under the structure in 4 hours, I need to respect the downtrend of the 4 hours. If I respect the time frame I'm in, so it means here I hedge my trade. It can go break the support, go down, then you lost a trade and you lost 1, 2, 3% of your portfolio. You tried it, you didn't have it, that's fine, no problem. Next one, because basically doing this 1-2%, but you buy yourself a shotgun that has 50 cartridge, 50 bullets, you know, 2%. 1%, you're gonna have a shotgun that has 100 cartridge. And this idea about trying as many cartridge as you can is also to improve your system of trading, because then you can test it back, you can look at it, you can go like, you can tune it, you can say, well, no, this is an asset, what I'm trading now, it is more about liquidity than about fundamental, then that's why also I trade mostly only Bitcoin and Ethereum because I know them, you know, I know the way they move, and so my tuning is good about them. Okay. When I try to trade Solana or other stuffs, sometimes I take some trades, but they are moving different, and it's less efficient than the assets I know by heart, you know. And in a market, always trade or the leader, in my opinion, because it's going to move better, or the challenger, but I don't see or eventually some kind of an indicial like S&P, you know, like an ETF or this kind of stuff. But anyway, now last thing, and about the fundamentals, but you know what is the fundamentals? Me, in my opinion, you don't trade the news, that's the first thing. And second thing, you're gonna always look a little bit the macro, what is going on, this and that. But you see, for example, when I go to the bank and I talk with my banker, I ask him what is the asset that nobody wants. And he looks at me and he's like, first he was like, and now he understands it. Really, I want the stuff that nobody wants because it's at a good price. And if I see the valuation looks good and that the fundamentals are super bad, but that there is value behind, then it's interesting to buy it. And this is in a very high time frame, of course, because it's a little bit different in other ways. Now, about the liquidity, just what I want to show you is this idea. That's about Bitcoin, but you can have it. You can have the commitment of traders. It's called in the stock exchange. Liquidity at the moment, you can understand there is an algorithm, and this is where Bitcoin got shorted or longed lately.
Okay.
So in 6 days, you're going to understand where the liquidation of the shorters are. So this is where they get liquidated, okay? And liquidation of the longers. You can have it like now it's on 7 days, but if you look at 6 months, voilà, you get the idea.
Can you help me read this chart? I didn't
Yes.
get it.
Alors, here there was a very long support around 100,000. You see, it's here. The price is here. And for long, we touched it, and it helped some people who were long to leverage trades with 20x, 25x. Sometimes on Bitcoin, it's 100x is not a big deal. 50x, like big leverage. This leverage do on Bitcoin, but not only, it's also an S&P and also on some other big assets. Some pocket of liquidities here. D'accord? For example, this is a big one. The one we touched when we went under 100,000. It was a target. Why it was a target? I am a bank and I have billions of dollars. If I want to buy contracts with Bitcoin, I say contracts because it's leverage. If I want to buy Bitcoin, but on paper Bitcoin, but it's the same for them, it's exactly the same. I need a place where I can buy a lot without having some slippage. And I need a place where I could sell a lot without having some slippage as well. Otherwise, when I push the button sell and I have billions, the price is going to crash. And otherwise, when I want to buy them and I want to buy billions, the price is going to crash as well. So the zones of interest for the bank at the moment, if you look at the 3 months, there will be one which is here. When we are at the top, for example, here we sold, okay, we reset kind of. Here the chart is reset. The point of interest will be here because we did a big correction for a long time and so it's under the support. Yeah. Will be here, again, under the support as well because we did a big correction for quite a long of time and it's under the support. And lately, even though it recovered and it went down, under the big support here at the 100,000 lately, there was a place where as the longs got liquidated, if I long, I buy one Bitcoin and the moment I'm liquidated, I am forced to sell it. You agree with me?
Yeah.
Because I give it back to the exchange. And in leverage, what you do when you leverage, you take a credit. Okay? So that moment my collateral gets taken, because I'm getting liquidated, is also the moment where the big institution that want to sell or buy billions has the most chance to buy a lot without getting a slippage. Okay? So all of these under support in Bitcoin are super important zones because if we have a range for a long time, it's ranging, there will be for sure a deviation under the range because this is where institutions are buying. And it gets related and this is where they're going to sell because it's the same. What do you do when you short? You basically short short selling is vente à découvert in French. So it means you basically have a debt. For example, the exchange give me one Bitcoin that I want to short. So they give it to me before I buy it. Okay. I sell it straight. And then Bitcoin goes down if I am in the good stuff. So at this moment, when the price went down, I buy one Bitcoin for less expensive than what I borrowed one, and I give it back to the exchange, and I take the money in the middle. This is the short sell system. It's a debt as well. Everything is a debt in this ID, but this is a debt as well. But when the shorters, they get liquidated, what happens? They have to buy. Because you get liquidated, so this debt, because the price didn't go in your direction, is not going down, it went up, you get liquidated. So what happens is you are forced to buy a Bitcoin.
So does it mean that there are people here who will need to buy 100?
Yeah, when they will be liquidated, they will be forced to buy to give it back to the exchange, the collateral that they shorted. So they will be forced to buy. But it's super interesting for the bank, the big institution, the smart money, let's say, they bought here, they will sell here. Because then there is no slippage. Because you have a lot of buyers that are forced to buy. So they know that from here to here, there is a nice move to be done, let's say. And before it was the opposite. From here to here, there was a nice buy to be done. And voila. After, I'm not telling you, it is not a exact science. Maybe the price is going now in the 90s, where there will be buyers also. So here, the people will be forced to sell, but there could be buyers at the front, and it's okay. It's not a problem. What I see here in this heat map is, at the moment, it's hard to make the junction. There is not a lot of liquidation here, because the price went up nicely. And there is a nice place to be selling here. So 114, in my opinion, about that, it's maybe going to move in time, is a nice place where to short the price, because the selling will be done. You understand? So the liquidity is over important in trading Bitcoin and in trading anything. But in Bitcoin, it's like over super important. And so this kind of heat map is super important to understand, okay, and exactly lately, and once again, now we look at the 3 months. Me, on my time frame, I always use the 1 year, but you could say now it's the 2 years, so it's really longer. You can say, okay, 114 is the next point of interest if we don't go to 90, let's say. But at 90 is a good buy. Next good buy is 90. And voila, it's quite simple. The last good buy was 99. You can see there is quite a bit of place, and the next point of interest is to sell at 114, in my opinion. So 114 is the next place where you can do a nice short. But that's the idea out of it. And on Ethereum, 2,500 is the next place probably, and maybe 2006. Voilà, but there is there is place where it is going to stop moving at least. Voila, then I think all the rest is risk management, and it's probably another hour of talking. Just voila, and also you have to understand, for example, why this is consolidation and why this is, in my opinion, more like bullish. This is something that looks bullish. It's also because here you have shorters at every top, of course. There is shorters here, d'accord? And if we break this, when we will go through that, so I explained to you, shorters, when they got liquidated, it's an act of buying. So it can be like a waterfall, a cascade of liquidations. So this liquidation triggers this liquidation. The slippage triggers the liquidation of everybody. So very often when you get off this kind of structure, which is a flag, distribution like this, if we can break through, maybe we don't, but if we can break through, there is an impulsive move going out of it. If I find one, but for example, this kind of distribution is horrible, it's very long and everything, it's taking time, but the moment we trigger it, you see how fast, because you trigger liquidation of them, then there is a bit of temporization, which I explained to you is by the fact that there was already a lot of volume profile in this zone. So there was, of course, here, many people who were underwater who sold. And then again, when we get out of this consolidation, there is more impulsion because you trigger the liquidation of everybody in the past. So that's the whole idea about a structure that is down always gets wrecked. You have to wreck the shorters all the time. Also, and in trading, it's why everything is always going up in a way, except the shitty penny stocks, but otherwise Apple and all of that, they always, because there is a system where people hedge themselves. Why? This is, for example, I am going to buy here, let's say 100 Bitcoin at this price, spot, without leverage, nothing. Okay, I buy them on the at the market price, 100 Bitcoin. A lot of people, what they're gonna do is they are going to short it at the same time. For example, I am going to take a value of 20 Bitcoin that I'm going to short 5x. D'accord? So I have a position that cancel the other one. D'accord? Here.
Sorry, let me understand. So 5x is what?
A leverage.
So you. Okay. But you buy 20 BTC?
No, I buy 100 spot.
Yeah, that's done. Cash.
Spot.
Cash deal.
Voilà. And then I short it in the 5x, but I short only 20 Bitcoin.
What do you mean 5x?
5x is the leverage. So I get liquidated basically if Bitcoin goes up 20%.
Yeah.
I get liquidated. So this kind of neutral strategy, you know, where, alors, you're not going to do it here at the bottom, but probably when you get closer to a top, a lot of people, they're like, well, what I'm doing is a bit risky. So I am going to hedge my position. Alors maybe they bought here, for example, 100 Bitcoin, but you hedge your position, which is, I'm going to use the leverage. Leverage is a tool. It's a gift in my opinion. Many people think leverage is bad. Leverage is no. It's just a tool. If you use it bad, I mean, you don't brush your teeth with a shovel. Yeah, it's stupid. It hurts. You're gonna no. Voilà. So and people use leverage as a casino, as a gambling. So they try to brush their teeth with a shovel, which is not the idea. For me, the idea of leverage is first, I'm not confident in letting 100,000 euros on at a broker's. So I prefer to borrow from the broker. Even at the bank now, I'm hedging a lot between banks and everything because you don't know if tomorrow Société Générale will still be alive, BNP will still be alive, whatever. I'm not confident with letting my money in one pocket. That's the first thing. Second thing, it's these hedging positions are sometimes very interested, which is I buy something cash, but at some point where it could go down, but I hedge myself. So I hedge my position with another position that is the opposite. And the real people that are doing really trading, they are using it a lot, which is here I feel it smells bad. I'm gonna hedge my position. So now I'm neutral. I go to bed, it's okay. Price goes up or down, my position is hedged. At some moment, I could be liquidated of this 20 BTC, but if I'm liquidated, anyway, this did plus 20%. So I'm gonna have 120 BTC at the spot. Voilà. The stuff is like neutral. So on the places where you arrive to a top, a lot of people hedge their position, and it's also what fuels the position to go higher, because I explained to you, when you have a lot of shorts, you can do a cascade of liquidation of the shorts, which bring you higher. So that's why also the big stocks, they always kind of go up. You have the feeling like, but it never stops, it goes up, because of these hedging strategies that push the price higher. And sometimes just a little trigger will push the price higher. After, you have some other stuff which are super interesting, which called Wyckoff accumulations and all of that stuff that are super interesting as well, which is to understand what, for example, is this accumulation or distribution? Voilà. But for me, with chartism and this idea of price action, it's already quite full. And last thing, to do just the parallel between, because now I gave you an idea of liquidity and technical. Fundamental we pass through, but it's mainly news. How I articulate liquidity and so what I explained to you is SFP, swing failure pattern, or real pattern, real chartist pattern that is going to a break, through these levels and these time frames. If we spend too much time under some support, then I consider we are not in this kind of buying zone that I showed you in terms of liquidity. It's a more selling movement. It's really a movement that is, so we lose the support in its time frame. I showed you the daily at the start. It's too much time we spent under, and I'm like, okay, I'm out of here. This is not, it's more the shortest move. So it is more the this idea that I showed you a double top before in the, voilà, this for example. This, we could find the time frame where that stuff like really gets broken. Here it's very sharp, so you will not take the first move, but the retest, you can take it. You say, okay, the support is lost, we are retesting, it's exactly on the trend plus, you see the trend here? Distribution trend, it's about exactly there. I have something that is horizontal plus something that is diagonal. It's a short, like a million times. This is in its time frame. The support is totally lost. It's quite obvious that this could reject. So that was a nice one to take. After many often you have a lot of like many times you need to hold your position and you see it like making tons of money, and then it's gonna trap you and trick you until like no your position is and finally you go to the point. So there is a lot of, you have to have balls of iron globally. But voilà, this idea in my opinion, if we talk about what you want to do is, you see a nice place like this, like a range, enter the range and be careful that if we go under it, so if the support is lost, it is not lost in the time frame where you want to go. Otherwise, you wait for the retest, and then you get out. It is not a problem as well. If you bound this zone, for example, like here, but that you see, because there is a retest in like 50%, so it's already, the question is always never get committed. For example, I don't know, you buy Tesla at 100, and then you understand, fuck, Tesla is already at 70. I'm commit, like I lose 40% of my investment, or I'm committed, exactly, or I put my price to be better, which is I buy more, exactly. How do you handle with that? You don't fucking enter more than 5% of your portfolio on an ID, and that's it. Then you're going to look at it and you're going to be like, well, this is like, I lost 2% of my folio at the end, So the whole idea, in my opinion, is that diversification, and you risk management. Because risk management, you never get into this idea of, I am committed, I'm getting emotive, I lost too much. There is three fears in trading. There is three fears. The fear of missing out, which is, oh fuck, the price is going up and I'm going to miss out this opportunity. The fear of being wrong, and it's the worst one, because that's the one you can get committed and that, no, it's going to reverse, it's going to back up, it's going to be okay. And the fear of losing too much money. Basically, these three fears, they cancel each other all the time. But if you have the right risk management, you are never going to go in too much one of the fear or one of the fear or one of the other one. And this risk management also, in my opinion, it gets you to have a shotgun, again, with so many cartridges that at the end, you're going to have balls of iron. And anyway, steel balls, and anyway, you're going to be like, oh, I lost a little bit and everything. But the size of the position is super important. If now I give you 1 million, and imagine in the first few days, you are going to be too much into, and that's the worst thing to do, too much into risk, but you make money, it's the worst. Like, the people who get lost most of the time is people, they arrive with, I don't know, for example, let's say 20K, and the first few weeks, they win 10K, and they're like, but if you win 10K, if you make 30% on your investment on the first few weeks, if you did it with the right risk management, you got super lucky and bravo. But it means you have a problem with your risk management. Like most of the time, it's not normal. You don't do 50% on your money the first months. It means you're gonna lose everything. at the end, you know.
Yeah.
And most of the people, they lose everything. I think there is a saying like 90% of the people lose 90% of their portfolio in 90 days. Well, I think it's quite possible, you know, that if you don't get educated and all of that. Me, I smoked before I understand all of that. I smoked maybe 3 accounts of trading. So you know, I mean, I know what I'm talking about, and I smoked them like fuck. Where's the money? It's gone, you know. And then you go like, yeah, I want to do this. I really want to do it. I commit myself to do it better. It's normal to. So I would say even at the start, give yourself an account that is maybe 10% of what you really have as money to invest. You know, if you start to trade like in this idea.
Gotcha.
Voilà.
Okay, super.
I will send you this. And,
yes, please.
Yeah, that's
then
the
maybe
first.
We do another one. Indeed. Maybe you teach me about the technology, like what's Bitcoin, Ethereum.
What? Yeah.
All the meme coins, whatever. Like, what the fuck?
Yeah, no problem.